Paul Volcker, former Fed chairman who curbed inflation by raising interest rates, has died at age 92. Hello there, my friends. Chris Marcus here with you for Arcadia Economics, and today a quick video about a somewhat sad bit of news that Paul Volcker, former Fed chairman who curbed inflation by raising interest rates, has died at age 92. Obviously, for anyone who's been following finance for a couple decades or is a historian of finance, Paul Volcker, a central figure, took interest rates up to 20%, I believe was the peak in 1980, which really held inflation in check then, because when you think about what was happening following the Vietnam War and LBJ coming into office and guns and butter, where a lot of the things that many of the Austrian economists, myself included, talk about now of out of control in spending and inflation, well, Volcker held it in check back then, and certainly a fascinating career. As you can see, as a senior Treasury official, he advised Nixon on taking the U.S. off the gold standard. Certainly a stunning turning point in history, and perhaps, was especially, I'm not sure what the right word is, interesting, but just brought up some memories seeing the news today, because I did get his book, and I remember is right around this time reading Keeping at It, if you can see there, just around last Christmas. Fascinating career, some of the things that he saw and did economically. I guess my economic ideology would be somewhat different, and I more of an Austrian view yet. So I wouldn't say Paul Volcker was by any means an Austrian economist, even though he did raise interest rates in a way that would be favored by the Austrian school yet. Perhaps just two quick quotes from his book, Memory of Paul Today, on page 118 of Keeping at It, and he mentions the context of the Federal Reserve's independence to set monetary policy was challenged only once in my direct experience in the summer of 1984. I was summoned to a meeting with President Reagan. Strangely, it didn't take place in the Oval Office, but in the more informal library. And as I arrived, the president, sitting there with Chief of Staff Jim Baker, seemed a bit uncomfortable. He didn't say a word. Instead, Baker delivered a message: the president is ordering you to not raise interest rates before the election, which, again, certainly given what's happening with Trump and the Fed these days, an interesting parallel. And one other thing that I thought was really fascinating from his book, where he mentioned strong public market demand for gold. This was leading up to the collapse of the London gold pool, and as mentioned in the article, when he did advise taking the U.S. off the gold standard. So back in 1968, strong public market demand for gold had required intervention by the major central banks, which sold gold from their reserves to prevent the price from rising above the long-established $35 an ounce. That was part of an agreement between a pool of countries established early in the Kennedy administration to defend the gold price. As official reserves of gold seeped away, France in 1968 decided to cease its share. And at an emergency meeting in Washington led by Federal Reserve Chairman Martin, the remaining pool members agreed to stop intervening to support the $35 price in the public market. So again, for gold historians, any economic or financial historian, certainly Mr. Volcker was a fascinating man, and the sad news of his passing, but sending best warm wishes to his family, everyone who knew him. And again, I enjoyed learning about him and just thought I'd pass along this note. So hope you're out there having a good night, and I will talk to you again soon. Thanks.